Welcome back to another episode of Dad's Gone Crypto, where we deep dive into the latest and most exciting projects in the crypto world. Today, we have something truly special. It's the update, the AMA update for the Minutes Token Network, which is about to launch. Right, any month now. We're just waiting in anticipation, but we're going to deep dive into the tokenomics and find out a bit more about that. So, if you're a node owner or just curious about the project and where it's headed, you won't want to miss this episode. We'll be breaking down the complexities, the highlights, the opportunities, and have a little bit of a fun along the way. All right, and guys, before we get into it, Ryan, how are you doing and how's your week been?
Oh, I'm doing great. It's been a good week. Market's a little up and down. We're still waiting for some fun things to happen here, but I think it's right around the corner. So
We're waiting for
waiting
those
for some good
fireworks.
times.
Yeah, agree. So, Ryan, just for those who don't know who Minutes Network is, we've been involved in it and we own some nodes and we're part of the project and we love it. But for those who don't know about it and potentially might want to learn more about it, can you just give us a brief explanation of what is Minutes and what do they do?
Yeah, Minutes is working in the telecommunications industry, basically terminating calls. And when you say terminating calls, people think, oh, they're hanging up on people. No, no, that's not what it means. So basically, they are providing the in between. So like if I want to call you in South Africa, I'm going to use my telephone carrier, whoever. I'm going to use Verizon, right? Because it's my phone. I make that call to you. Well, when it gets over to you, it's got to switch to Vodacom or whoever you're using over there in South Africa. Well,
Mm.
that in between is basically what Minutes Network does. It takes that call from me going to you, and it terminates that call in between. So in general, the way it works is that happens like 5 or 6 times on the way for this call to be connected, and it's going through a number of middlemen. Instead, Minutes Network is using technology to shorten that and just them as the in between. So they are actually terminating the
Yeah.
call with their node network. And we'll get into the node network here in a little bit, but that node network basically is what's making this connection happen. It goes in, it verifies, makes sure the call is clean, and then it sends it over. And all that happens within a fraction of a second, in order to connect that call from here in Cleveland, Ohio, all the way out to South Africa. When they terminate those calls, they get a revenue share, right? So if they're terminating the call, they're connecting the call, basically is what that termination means. They're getting they're charging the phone carriers for that service. So that's how they're generating revenue.
Mm.
And basically they're able to do this because their costs are so low, because it's their node network that's going to be actually terminating these calls. They're able to offer this at a much reduced price compared to what carriers are used to paying. So basically, their revenue model is they go in, talk to the carrier, get a deal with them, and they are able to terminate calls much cheaper than what the carriers are used to paying. So it's kind of a no-brainer. Carriers use them, add them as an option. And then every time a call is terminated, Minutes Networks make some money. That money goes into a pool and they use it to purchase tokens on the open market and then distribute them to their stakers, node owners, all that sort of thing. So we'll get into that later, but that's kind of a quick little introduction of what they actually do.
And what makes them incredibly unique is that they got proprietary software which they've developed, and it's live and it's running. And these guys have been in the business. Josh has been in the business and his team for multiple years. Since the age of 12, he's been in the telecommunications business. Josh is the CEO of Minutes Network. And this proprietary software allows them to take an advantage. They're first to market, right? So, whereas think about Ryan's just phoning me, there's a carrier in between, but there are probably 6 carriers that are in between, right? And each of them have a different rate in which they negotiate with the Verizon and with Vodacom. And depending on the quality of call, the person will get connected. The carrier will step up. If the quality is poor, the next carrier will get it, and then that percentage is charged. Now, what happens if they've created software and using blockchain technology that the quality of call is high definition and the price is unmatched in the industry? Now, technically, they're making carriers more money. But like, whoa, what do you mean you want to make carriers more money? Well, that's the beauty of the sharing economy, is that yes, Verizon and Vodacom will make more money because they get a better rate. So it's $1 billion industry. Yes, they make more money, which is great, which means the adoption of minutes is inevitable. And then, of course, everybody gets a piece of the pie. The person making the call, the person receiving the call, the nodes validating the quality of the call and connecting the call through the digital space. And of course, there's an app technology as well, which now links everything together. So when you say proprietary, it means that they're first to market, and no one's caught on just yet of how they do it. So, and they've already onboarding 20 million users. Is that right, Ryan?
Yeah, they're currently onboarding 20 million, and they said that they basically have contracts signed with people that they're going to be able to onboard. I think over 2 billion people within the next couple of years here. So
Yeah.
it's an absolutely huge number.
Yeah. So this particular project allows you to actually have an invested interest in a telecommunications company where you're part of the infrastructure, as opposed to you going to the stock market and buying some shares. You have no say whatsoever, in the sense, at least, by having a node, you're part of a solution which you're providing and connecting millions and millions of people. All right, guys. So these are the topics that were discussed in the tokenomics. They have a very jam-packed AMA, or in the spaces, and we're just going to talk about the topics, go into a little bit more detail, and yeah, just have a chat about it and keep you guys up to date of what's happening. The first thing that was spoken about was the cap supply and token release strategy. So, Ryan, let's kick things off with the basics. MNT, which is the token name, is capped at about 500 million tokens, and is released over 60 months. What does this mean for node owners, especially when it comes to the value appreciation?
Well, I mean, a capped supply. Lots of tokens have a capped supply, and that's a very good thing. You don't want an infinite supply because, I mean, if you think about that, if you could just keep printing tokens, well, then it's like the U.S. dollar. It's it just inflates and inflates and inflates, and it's not worth anything. So you don't want that. So capping the supply at 500 million, it's just drives up demand because of the scarcity, right? The real kicker you mentioned there, the 60-month release schedule. So the way their tokenomics are laid out is basically they're releasing certain tokens. Like, I think that's like 12.5% of the supply is in the public sale. So you're going to have a very few number of tokens that are actually released at launch.
Mm-hmm.
The rest of their tokens, the team tokens, a lot of the infrastructure type tokens, all that kind of thing, are going to be gradually released over the next 5 years. So it helps keep the token supply down, which hopefully keeps the price up, as far
Yeah.
as pretty much anybody goes with that kind of thing.
And Ryan, that 500 million, it's a weird number because we've been in this for a while, and it's a weird number to see. It's generally like 100 million or a billion or a trillion, but 500 seems a bit weird. What is your take on that?
Well, I think, I mean, obviously they had a tokenomics company help them determine that, but for the most part, the way their system works and the way their token works, it just, it works well for them. They only need that 500 million tokens in order to get their job done. And don't forget, you talk about 500 million tokens, but at the same time, those can be fractionalized. So, I mean, like, look at Bitcoin. Bitcoin only has 21 million coins that will ever be produced, but it's fractionalized into sats. So it's really, I don't want to say meaningless, but at the end of the day, 500 million tokens, you could still have, a billion people using it because of the way you can break it down fractionally. So, that brings us to the second point that they talked about in their AMA, and that's their revenue sharing model. So this is where things get interesting. They're turning all those revenues, they're going onto the open market and purchasing MNT tokens. Now, 60% of those that they purchase are being distributed to node holders. So if you're holding a node, you're getting a very nice chunk of their revenue, sent back to you in your node rewards. And it sounds like an absolutely sweet deal, but the question is it sustainable in the long run?
It's a great question. The beauty is basically in the design. It's not just the short term gains, but fostering long term network participation. By giving node holders a significant chunk of the revenue, it encourages them to stick around and help the growth of the network and creating a decentralized platform. It's like planting a tree and waiting it for it to bear fruits. And the more trees you plant, the more fruit you get.
I like that analogy.
Now, Ryan,
Makes me want to go buy some more nodes.
I thought you were about to say trees. I'm like, no, nodes, correct. We can never have enough nodes. All right, staking. So the third thing that they spoke about was staking and the node system. All right, so let's dive into the staking and node system. There are switches and validators, and each have its own dynamics. How does the staking system stack up against traditional models out there?
Well, this is where Minutes Network really sets itself apart. The dual node system allows for flexibility. Node owners can pick the level of risk and reward that they're comfortable with. It's almost like choosing between a savings account and a high yield investment. Both have their perks, but with different levels of commitment and payoff. So your switch node, which is basically the node that's actually doing the call connections and the switching, that's gonna, cost you a whole lot more than the validation node, which is the one that's going in there and checking to make sure that the call is clear and that the quality is there. The validator node, you can go on right now and you can get them for 10,000 M&T tokens. You basically have to stake 10,000 tokens. So, if you convert that to what their cost is currently a public sale, you're looking at about $3,000 to pick up a validator node. The switch nodes are 50,000. So you're putting 50,000 tokens into the staking pool, and you can then secure yourself a switch node. That brings us into the fourth topic that they talked about in the AMA, and that's their burn mechanism. Their burn mechanism is algorithmically produced. So basically, there's an algorithm that looks at how many tokens are staked versus how many tokens are currently circulating. And every epoch, when the nodes get paid out, certain number get burned based on that algorithm. So what that's effectively doing is it's reducing the supply. So every time rewards get paid out, the algorithm goes to work, figures out what the burn's going to be, and a certain portion of tokens are going to be burned rather than rewarded. And in the long run, that brings the token supply down, which, in general would make you think that the token price would go up.
So it's like balancing the scales, because if they're releasing the total supply over 60 months, right? So I don't know if it's every month or every quarter, and they put extra supply into the market. Technically, if everything is status quo, the price should go down. But by burning, all right, they keep that state of flux where you can almost, I wouldn't say stabilize, but keep the balance of the token.
Yeah, absolutely. So as tokens are being distributed over that 5 years, they're going to have monthly releases, but at the same time, every month as people are earning rewards, there's that burn mechanism that comes in. So you're right; it should keep a pretty good balance between the keeping the token supply pretty steady. I know there's going to be more tokens coming out than are going to get burned, but at the same time, there's also going to be more staking happening as people are trying to earn rewards. So they have a really cool token model where it seems like they're going to be able to balance that supply very, very well.
Mm. And something which is also quite exciting is that number 5 they spoke about is a multi-chain expansion. So it's not going to happen all at once, but they can release minutes MNT tokens on different chains, and that's a good thing. Why do you want it on different chains? Because it attracts a different type of investor, it attracts a different type of person. Some people are Bitcoin maxis, some are Ethereum maxis, some are Base and Solana, and they'll only support those chains. But if that token is on that exchange, they will probably have a dabble in it. They might get involved in it. So it's exciting that they're not just focusing on one area, but creating a diversified multi-chain expansion.
Yeah, absolutely. I mean, going multi-chain, it's like expanding your business into new markets. When they support Cardano, Solana, all the other chains, Minutes Network, it'll just vastly increase its user base and its utility. It's a strategic play that opens up new doors, and even if it takes some time to get there, they're in this for the long haul. So
Definitely. Um, One of the things I got a little excited about is the number six is the early staking rewards. So these guys decided that by you owning a node and thanking you for owning a node and keeping that node for a period of, I think it's 2 years, they will give you 75% of the tokens that you've purchased back in rewards. So basically, you are getting additional, this is excluding all the rewards that you're getting from, the phone calls made, the SMSs that are sent, and all of that. It's just an added bonus for being an early adopter to the project, and also having diamond hands and holding thumbs, because yes, nothing just starts off and just rockets into space, and if they do, they come crashing down just as well. You want to build something strong. You got to go through the paces and the teething and expansion and scaling. You can't just scale from zero to hero, overnight. It takes time, and you want to do it properly. So they're saying if you're part of the solution and part of helping us grow this expansion, adoption of the services, we will reward you, and that's magic.
Yeah, you're absolutely right. 37.5 million MNT are allocated to those early node stakers. So, like you just said, basically over a 2 year period, they're going to release those monthly, and you're going to end up getting 75% of your, of what you purchased back to you in staking rewards, and that obviously you still have your stake. So it's a really cool concept, and that, as you said, it has nothing to do with all the rewards you're going to be earning. I mean, the more that you look at this, the more it's just an absolute no-brainer to me, because they're giving you your tokens back that you purchased, and you get as a reward, and you're still keeping your principal balance. So pretty amazing. That brings us into the seventh thing that they talked about in the AMA, and that's the fact of their user rewards and network growth. Minutes Network isn't just about the nodes. I mean, the nodes are a big part, but it's
Mm.
also going to be rewarding its everyday users for making and receiving phone calls. So basically, the way their system works, if you are using their system and you're part of their app, you're going to be able to earn rewards just for making and receiving phone calls like you do all the time. How do you see this playing into the overall growth of the network, Sean?
Well, the more transactions that happen, the more calls that are made, that obviously strengthens the system. The more users that actually get onboarded onto the platform means more rewards and more incentives for everybody. And what was a nice touch is that there was no reason why the person making the call and the person receiving the call should get any rewards. But Minutes decided that, well, they're paying their normal fees, right? No different, because the savings that the carriers like a Vodacom or a Verizon would make, they're obviously going to keep for themselves. But let's incentivize the users to say, okay, but we also want a piece of the pie. So what they've done is that, let's say Ryan knows nothing about Minutes. In 1 year's time, he's made a lot of calls to his friends overseas, and then all of a sudden he gets word through some marketing material that, hey, and if you made international calls, you possibly might have MNT tokens. So he's going to go onto their platform, put in his details, verify who he is, and he's going to see, oh, wait a minute, I have free tokens, and he can do what he wants with it. He can sell it, he can stake it, we can do what he wants with it. But that's the beauty. And up to 60 months, if I'm not mistaken. After 60 months that he hasn't claimed it, then it'll be burnt, which is great because then it reduces the supply as well. So it's literally rewarding everybody. It's a sharing economy, which is flipping amazing.
Yeah, it's really cool. I mean, especially when you put it that way. So a lot of people that are making phone calls aren't even going to really know that they're being
Yeah.
rewarded, right? I mean, and that's all that's essentially doing is taking that out of the token supply. So, I mean, you're going to have loads and loads of tokens sitting on wallets that people probably aren't even using, and it
Yeah.
may bring a whole lot of new people into crypto when they actually say, oh, wait a minute, what is this? What is M&T token that I'm earning here? And I could see that bringing a lot of new people into crypto.
And let's not talk about the Unity nodes just yet. That'll be another episode, but that's another way of onboarding millions of users and also, being a part of that decentralized economy where you can earn crypto MNT tokens just by having a phone, and yeah, but we'll get onto that on another stage. Number 8, NFT node ownerships. So let's talk about NFTs. There was like, yes, there's going to be NFTs. No, there's not going to be NFTs. Now it's back on the table. So why and what's the purpose of this NFT? So if I have a node, I now get issued an NFT that's linked to that node. But what is the purpose of this NFT, Ryan?
Well, honestly, it's kind of where things get really cool for the node owners because it's turning those nodes into NFTs makes the node itself a tradable asset.
Mm.
So instead of just having, all of your tokens that are staked in there as assets, instead, now the node itself becomes a tradable asset. So, it's like owning a piece of digital real estate that you can trade or sell. It gives node owners more flexibility and liquidity. And honestly, it's a really smart way to keep things dynamic and engaging for the community.
Exactly, and it also it doesn't it prevents the fluctuation of dismantling that, because at any click of the button you can click take the node off and I can sell my tokens at any given time, right? But then that 50,000 tokens goes into a sell mode and pushes a bit of sell pressure. So what they're saying is, but hold on a sec, you've got an asset that's generating you revenue every month, right? Maybe right now, I can sell it for maybe 2.5x of what I purchased it for. But what I do is I sell that NFT. When I receive that NFT, I basically go into my account. The node is there, right? I can then dismantle it if I want to, but ultimately it's basically locked up. So it allows you to trade that asset and grow that asset and so forth. So you don't just have to do the 50,000 tokens. You can actually add more to it to get more of the pool, but that's another story. But very cool way of, just keeping harmonious balance within the ecosystem.
Yeah, absolutely. I mean, the nodes, the fact that you can actually trade the node is super cool because as this thing gets going and people see the rewards that these nodes are pulling in, it's going to be impossible to get a node.
Mm.
Um, so the only way you'd be able to do that if it wasn't this NFT kind of deal was when somebody unstaked, you'd have to be super lucky to go in there and get to buy the node, right?
Mm.
Because you'd have enough tokens, go in there and restake it. But doing it with the NFT idea basically allows, you could actually just go purchase the NFT with all the tokens attached, and then you're guaranteed the node ownership rather than having to buy tokens and then just hope that a node became available.
So just an interesting question, because as the project is maturing, obviously things change, right? And information gets updated. So now the question is, you could, once you've owned a node, it says, hey, you got a node, there's 50,000 tokens. At any given time, I can unstake it. Obviously, when it's TGE, I can unstake and I can sell. Now that they brought the NFT back, is the can I dismantle that and then someone else can purchase that on the market, or does my 50,000 tokens go away and I have to sell the full amount? So that's probably a question we'll have to ask minutes. But it's just very interesting, because do I have to sell the entire 50 as a node, or can I dismantle it? Previously, you could dismantle it, but now just thinking about it, like World Mobile did it, you had to put 100,000 tokens in. You got an NFT, but there's no ways you can sell that. You have to sell the entire NFT. So
Mm.
just something interesting there. Number 9, future adjustments to the rewards. This was also very interesting. So it's very cool, and they have been listening to, they've got a couple of channels that are happening, the unofficial and the official channel, and they've been listening to their audience and to their community. And it's amazing how, when you read these things and they proposed, in the general chat, you think your voice is not heard, but they actually are. And this is one of the things which they brought in. It says the project has planned to adjust the reward system, reallocating 10% of the user's rewards pool to the holders, which is new. And how does this change the dynamics, right?
Basically, they had introduced staking, so staking, being able to delegate your stake to people's nodes, that was going to kind of deteriorate the rewards for the node holders because the stakers were going to earn, right? So instead of that, now they've gone back in, they've listened to everything we had to say about it, and now they've gone back in and they said, well, no, our node holders they're our early champions, right? These are the guys that are really supporting us, so we got to make sure that they get enough reward to make it worth it to hold these nodes, and that's exactly what they've done. It's all about balance. They've shifted a bit more rewards to the node holders, so it makes staking to these nodes way more attractive, especially for long-term node holders. It's like fine-tuning an engine, little tweak here and there, and you just keep things running smoothly and ensure that everyone's on board, for the ride. And that's exactly what they've done here. They've listened to their users, and they've made holding those nodes way more rewarding. And again, that's why I'm super happy to be a node holder.
And when you've been in the game for some time, you're constantly looking for potential assets that can create residual income or continuity income. You'll ever, right now, am I earning money? Right now, is Bill Gates earning money? And let's not use Bill Gates. Is Elon Musk using money? Right? Is he making money as he has a cup of coffee in the morning? Right. So the question is he or isn't he? He is. He is. He can sleep and he's earning money. So his vehicles or his assets are generating revenue for him, and that's the kind of thing that you need to look for. We are not saying minutes is the be all end all. We're saying that this is a type of asset that could potentially provide you that residual income, but remember, this is not financial advice. You got to do your own homework. You got to do your own research. This is crypto, but I think the beauty of what Minutes is that actually, a company that deals with deepen and decentralized physical infrastructure, and they are building alongside World Mobile, which actually are putting up nodes, which is physical infrastructure as well, and they're interconnecting together. So we're very bullish because we first got into World Mobile a few moons ago, and this is the brother of Mickey Watkins, and he's created something which is amazing and proprietary and a game changer to the telco industries. And I'll let you in on a little secret. We had a conversation with one of the telco companies in South Africa. I'm busy connecting them to them, and they were like the guy was speechless. he was speechless. He's the head of wholesale agreements. He does the wholesaling for those tier guys, and he was like, this is actually going to change the industry. It's he was absolutely speechless, and it's a disruptor. And remember, these guys are big boys. We're talking about multi millions of dollars, right? And he was like his jaw dropped. So it was quite funny to see because it's something new, and as it starts to penetrate the market, it's a no-brainer. Everybody's going to adopt this because who doesn't like earning more money? Carriers want to make more money. If they can add more revenue to their bottom line, why wouldn't they? Why wouldn't they use a cheaper, better quality connector or terminator, as they call it? So, yeah, exciting. And then
Absolutely.
most importantly, number 10, since we were talking about World Mobile holders, there's going to be an airdrop for you long-term holders. And finally, it's because they're obviously interconnected and they're working together. World Mobile holders will get an exciting airdrop soon.
Yeah, absolutely. I mean, airdrops are like giving out samples at the grocery store, right? Gets people interested and engaged. It gets people excited about it. So, dropping a bunch of MNT to all the World Mobile token holders out there, they're not just building hype; they're expanding the community and increasing token distribution, which it can drive network growth and user retention. And hey, I'm a World Mobile token holder, and super happy to be getting a little airdrop from them as
Definitely.
well.
Have you got your WMT mug in the back there, Ryan?
Oh yeah, it's back there somewhere. Where is it? Oh,
Now,
the mic's hiding it. Oh well.
the mic's hiding it. Damn. All right, we just need a MNT one MNT mug there, Josh. If you're listening,
That's right.
please send one to South Africa and one to America. Thank you. All right, cool guys. So that's kind of like the wrap up. We did a bit of a deep dive, so I think we're going to do more of these because sometimes the AMA, yes, it does answer the Q&A and stuff like that, but we can spend a little bit more time, chatting about things, going back and forth. This one was a little bit of a long one, which is cool because it's exciting and it's a much anticipated, spaces AMA for tokenomics. It sheds light on a lot of things, especially when it comes down to how things really work and the reward structures and stuff like that. So very, very cool. We are going to be doing more of these in the future, just to kind of shed some light on it as well.
Yeah, absolutely, Sean. And remember, in the world of crypto, especially, knowledge is power. So keep exploring, stay curious. Don't forget to check out Minutes Network. And who knows, it might just be your next big move here in crypto.
And speaking of next big move, Ryan, it's now Dad's Got Jokes.
All right.
I'll kick things off, right? This is the part of the segment where we do some corny dad jokes. Our kids love it. How do you know, Ryan, when your clock is hungry?
Wow.
It goes back 4 seconds.
That's a good one. Well, I'll tell you, I keep hearing this. They tell you to say no to drugs, right? But if I'm talking to my drugs, I've probably already said yes.
That's brilliant. Hey, you stop it now. Stop it. Stop it.
No drugs.
No drugs. Oh, please. No drugs. Just one more. Shush. Mom. Oh, shit. Okay, guys. Well, that was, I think that was probably the joke of the year, I think. Well done, Ryan. Sure. Stepping things up here. Hey, now gotta get my A game going.
I don't even remember where I heard that one though. So I can't even give credit.
It wasn't last week you were talking to your drugs.
Well, actually, maybe.
Maybe. I don't remember. Deniability.
No, don't do drugs, kids. Don't do drugs.
Yeah.
And don't talk to them either.
All right, guys, and that concludes our episode. If you enjoyed this segment, something a little different, which we want to continue and improve and shine on, please hit the subscribe button and share your comments. If you have any questions, please, post them at the bottom here. We'll ask Josh and the team if it's something that hasn't been answered. And then, of course, join our Telegram group. And we enjoyed being with you guys today, and we look forward to next week's episode.
Yeah, for sure. So catch you later, guys. And remember, whether it's Bitcoin or altcoins, always do your own research and make informed decisions. So stay safe out there, guys.
Cheers, guys. Bye-bye.
The material and information presented in this recording are for entertainment purposes only. Do not misconstrue what you hear as investment or trading advice. Always do your own research. The views, thoughts, and opinions expressed by the guests on this recording are their own and do not necessarily reflect those of Dad's Gone Crypto or its hosts.